We have some more people coming in, but I guess we'll get started. Thanks everyone for joining us today for Values-Based Investing, the future of client engagement. We're thrilled to do this with our newest partner, Broadridge. Paul, Patrick, do you want to introduce yourselves?
Sure, go ahead, Patrick.
So my name is Patrick. I'm one of the founders of YourStake, and here with Paul to talk about our integration to empower values-based investing across the Broadridge platform for the benefit of wealth managers and their clients. A little quick background on myself and YourStake. Have an academic background in the field of sustainable investing, economics, finance. Have a little bit of introduction covering some of the history of the field, and have been leading YourStake for the last 4 years. We've been the top rated solution for analysis of ESG and SRI by wealth managers that are surveyed by the T3 survey of independent advisors. So we're really excited to take what we've developed and what we've built and integrate it into the Broadridge platform to bring that to all of the clients that leverage that system. So Paul, turn over to you.
Perfect. Thanks, Patrick. Paul Camuto, nice to meet everyone. I've been within the wealth management fintech space for probably about 20 plus years now. I grew up primarily within the Merrill Lynch world and transitioned into Pershing, Bank of New York Mellon, and now I've been with Broadridge for the better half of about 3 years. I run their wealth aggregation and insights business unit within Wealth for Broadridge. And in essence, we're a comprehensive, holistic aggregation solution that pulls in assets regardless of where they're custodied to provide the advisor with a pixel perfect wealth report to present their client on performance, balances, asset allocation, et cetera. Having more relevant, impactful, personalized data about that client and then tying it to their actual investments is what is needed in the industry in order to remain competitive and to differentiate. And that's why we're here with YourStake, very important and very relevant within the marketplace. So very excited to showcase what we've done, and very thankful to Patrick and his team for embarking upon this journey with us.
All right. And Jack, I think I figured out how to share this, so I will get that started. So that way I don't have to say click next.
All yours. You should have access now.
All right. So as a quick agenda, I'm going to take the first half of the call or so to go over some of the background of where we are in the landscape of sustainable investing, how our approach sits within a broader field and the history. Then front and center address what the pain points and concerns we hear from wealth managers in this field, how we're addressing them, and what we see to be the opportunity. We'll touch on some of the success stories of firms doing this really well, and the regulatory landscape and trends that we're situated in and where it's going. Paul is then going to take over and demonstrate how the Broadridge platform integrates some of YourStake questionnaires and analytics. And what time we have left, we will open up for Q&A. So first things first, a lot of people have an impression that ESG, sustainable investing, responsible investing is a new phenomena from the last few years, or they just started hearing about it. The interesting history is the origins of the financial system actually were very strongly influenced by concepts of responsible investing for most of human history, and certainly from the beginning. And it's really only the first half of the 20th century where that wasn't so much the case. For example, in medieval Europe, the Catholic Church had a lot of influence on practices where they, for example, prohibited usury, which is charging interest on loans. So there was a lot of development of alternative financial instruments and practices to align with those principles, such as partnership and profit-sharing agreements. This is actually still a very common tenet in the Islamic world, Islamic finance today. So you had monastic orders engaged in finance, managing lands, providing rudimentary banking service, aligned with principles from the early church that sort of laid the groundwork for lots of patterns of development migration. So the first half of the 20th century, when we had the sort of emergence of modern finance with the stock market and all the different types of financial products, original mutual funds, et cetera, that wasn't the case. But in this latter half of the 20th century, organically, you saw a lot of interest in bringing back some concepts of responsibility broadly defined from a lot of institutions, starting to engage as shareholders and divest from topical issues like South Africa's apartheid, and implement restrictions on things based on faith, like gambling, tobacco. And the first 20 years of the 21st century, we've seen one new approach, which is ESG, environmental, social, and governance, which is broadly defined, leveraging lots of data points to try and add a lens of analysis of non-financial data that may be material to assess risk for evaluating investments, very similar to the concept of credit ratings, where there's an agency rating an ESG score. And now, what we are really focused on at YourStake is helping wealth managers capture the minds and hearts of their clients and be able to serve people better. When there's a long history in a field, just like with every other field of finance and science, really any other field, there's a lot of jargon that emerges. So this is not meant as a slide for you to read everything on it. Don't feel like you have to, and I'm not going to go over everything on this call, but there's a lot of terms that have very specific meanings in the field. And for a new person in the field, especially a lay person, so a client that walks into the door of a financial advisor's practice, this can be overwhelming. And for implementing responsible investing, ESG, social responsible values, there's a lot of different approaches that can be taken around ways to screen, shareholder engagement, different types of philosophies of how do people define impact and how do they create it. And that leads to a lot of robustness and a lot of choices out there in the marketplace of different strategies or financial products. It also leads to complexity and confusion. So at that point, we'd like to take a quick poll of the audience of what you see as some of the biggest concerns in your business or what you've heard from advisors and their investor clients. So we'll keep this poll open for a minute or two. Just to sort of read what we're looking at here, confusion about what it is, the quantitative scores, how they're calculated, what data came what was the algorithm, concerns about financial performance, concerns that someone is making a financial portfolio that doesn't reflect their values and trying to pass it off as what they should be doing. Uncertainty about upcoming or current proposed regulation in the United States or international regulation. And then the operational complexity of actually implementing solutions and handling diversity of clients, values, and investment products all around this topic. Cool. So I'll leave the vote up for another 15 seconds or so. So far, it seems like the most votes are for confusion around understanding and communicating data. Great. So here are some of the pain points that we hear on our journey of trying to develop solutions to help advisors of concerns about returns, concerns about demonstrating impact, how to implement it. The most important thing that a lot of these concerns boil down to, and especially the conversation around data and that confusion, is trust. It's been said by many economists that the whole financial system is really based off of trust. And what does trust mean for an advisor? It's having a positive experience, so listening to what the client wants, showing that you're able to address what they want, and then crucially being able to explain and demonstrate why, to answer any question and confirm once you have chosen a portfolio over time that you are able to do what you said you would do and fulfill the promise of what you're proposing and offering. We really think about that in a empathetic client experience of making a questionnaire front and center for an advisor to navigate the conversation. And Paul will go into more detail in the demo of the implementation of the Broadridge platform, of the questionnaire and the reports. We really distill the whole experience we're offering as making the advisor confident in a client conversation to respond to anything that could come up, whether it's what the client's interested in and navigating that initial conversation, and demonstrating over time, what does it mean? And not just the top line, but being able to substantiate where the data is coming from, what the, in this case, toxic air pollution, what are the actual chemicals coming from what factories aggregated off their portfolio holdings based off of each company. We find really effective when advisors can be confident, and when they're not confident in being able to respond to client questions, they are hesitant to bring up the topic of sustainable or responsible values-based investing at all. How do we do this? So our approach is different from incumbent ESG scores. So when you think of an ESG score, you think of a rating where it's a judgment of a security, whether it's a fund or a company, based off of some rubric that may be disclosed in a methodology, but is ultimately coming down to a judgment call from the person or the group that's coding the algorithms to make the judgment at the rating agency. Our approach is that instead of providing our opinion, we base the assessment off of what the clients demonstrate they care about. And on the fly, our system will recalculate the alignment based off of the client's values. And instead of when a advisor's sitting in front of a client and they ask why, equipping them with a 100-page methodology document that they can then start to explain the algorithm or econometrics to a client, we show the reports in common English with transparency, where they can click through and see the data, see the calculations and origin right there in context, and go through it with the client if they want, totally intuitively. And when it comes to implementation, this is an analytic solution. So there's a lot of ways you can implement it. And there's even more flexibility. The personalization that we offer, because we're basing everything off the questionnaire, by default will help the advisor personalize the conversation with the client. So even if you're not offering different types of granular thematic funds or direct indexing, the advisor is still equipped to have that review meeting or the proposal meeting and focus on the issues that the client actually cares about and resonates with and wants to talk about. What is the opportunity? So there are a lot of things that are said about sustainable investing, and the media will go back and forth on whether it is in vogue or not, but the survey data indicates that 85% of investors overall are interested in values-based investing, and that rises to 95% among millennials. And this is from the Morgan Stanley Sustainable Investing Institute survey that they've been doing for a few years. But I do want to pause for a moment on that number, because there are very few things in this country that I would say have a 95% interest. I think if you ask people, do you like ice cream? I think there's enough people that are lactose intolerant where it would not be 95%. Or if you ask people, is Elvis still alive? I think you would get proportions that are not so much of a consensus. The other thing that's really interesting to touch on here is this 85% overall indicates that's the vast majority also of Gen X and baby boomers included in that. So that while the proportion is higher among millennials and Gen Z, and there's a huge ongoing generational wealth transfer opportunity, that does not mean that the older demographics are disinterested. In fact, they're still very interested. And what we find is that the way for an advisor to have success is by knowing how to bring up the conversation and navigate it. Because a lot of times what you see in the discrepancy between the high survey interest and the realized total fund flows is because clients don't know to ask about this, or they may come in with a misconception. Whereas if the advisor is able to start with what they care about and navigate the conversation, they can arrive at the things that their clients are actually interested in and drive AUM flows and adoption. So one example of one of our earlier subscribers as a wealth manager within a regional broker-dealer called Vanderbilt. The firm name, it's two advisors in New Jersey. Their name is Common Interest. And when they, they've been around 15, 20 years. When they were first introduced to YourStake, their AUM was around 43 million. And within 2 years, they've gotten to 90 million in AUM. And they, with every client, will lead with the values conversation, and they will win business through being able to navigate and demonstrate that, for any client who's interested at all, that they're able to go into more detail and build better trust than the advisor down the street who just points to something that maybe is labeled sustainable and says, here you go. And this is a trend that has ups and downs, but the overall sustainable AUM fund flows are growing. And in the United States, there's a little bit of a in-between status right now of the regulation, where the SEC has proposed some rulings around ESG, values-based investing, a few years ago that have not yet been implemented. All of those are following the SEC's philosophy of making sure that the end investors are informed. So they're focused on disclosures and record keeping for advisors to be able to substantiate that they are acting in the best interest of the client. So this is actually a really great reason to have a process where you have a questionnaire up front to be able to demonstrate as a fiduciary and know your customer that the clients are getting a experience that aligns with what they actually value and not with something that they don't value. There have been challenges in a lot of states to ESG. Those are typically relevant to pension funds, other like government run or government held investment vehicles. Very few of those regulations affect individual wealth investors. And the European story is one of very strong regulation that's been being implemented over the last couple of years around SFDR and the MiFID II, MiFIR addendum, which essentially just mandates that wealth management firms must have a questionnaire they offer to clients that allows clients to select the values that are important to them. The European Union has a taxonomy of things that are one of the options, the EU taxonomy. But then also, once the client is invested, the regulation requires that wealth managers must be able to report and demonstrate and substantiate the investment vehicles over time and what they're doing. One other quick touch point on risk and concern of performance. We find that the most important thing when we're designing our questionnaires is really to make things intuitive for the client and build compelling experiences that motivate them to choose to invest in this way. And there's lots of ways to communicate risk to clients. And I don't think it's, we don't think it's necessary to use values as a way of communicating risk versus traditional risk metrics that you show side by side. But there are a lot of strong cases for various strategies that leverage different metrics and values in the service of reducing risk, such as by looking at sector exposure and climate risk and actions that companies take that increase or decrease their risk of regulation or penalties. On the performance question, there's a lot of research, and we'll show a little bit of this research on the case for broad stroke sustainable investing actually having outperformance and lower risk. But if you really want to get into the weeds of the meta-analyses that have been conducted, what is important to distill to a client is that it is not necessarily the case that investing according to values or sustainability or any way that they think of as a term, that will not necessarily decrease performance. There's studies that show that it will increase performance. There are studies that show that it will decrease performance, but the aggregation is that it's clear that it's not clear that there is poor performance. So we actually at YourStake don't really get this question as often today as 4 or 5 years ago. But the key thing is that just like any other investment diligence, what most matters is understanding if you're investing in a portfolio or a managed fund, what is the investment philosophy specifically? What is the competency of the team that's managing it? And if they have a thesis around sustainability, making sure that they have a good thesis and a good process of implementing it, which using data and reporting can help substantiate. But just the fact that something may or may not be labeled as sustainable is not an indication of performance in and of itself. Right before we switch over to Paul, there are a few things that are challenges in scaling sustainable values-based investing. So, now you want to do values-based investing. How do you actually implement it? How do you make sure it's done in a compliant way? How do you manage if we're handling lots of data about very different topics? How do you manage that and make sure that it's presented to a client in a way that is compelling, that tells a story, that is rigorous, audible, defensible, and that also is not overwhelming the client with complexity or confusing them. So with that, we'll hand it over to Paul to talk about how the Broadridge Wealth Aggregation and Insights platform now does that.
Awesome. Great. Thank you, Patrick. Before jumping into the demo, I just want to give a brief highlight and overview of who we are, why us. In essence, Broadridge is the parent company. We're within the wealth division of Broadridge. For those that don't know Broadridge, they're a global leader. About 14 out of the top 15 wealth providers in North America use Broadridge. Primarily, Broadridge is known for more of their trade processing, their print mail correspondence. They have touch points within asset management, capital markets, and within wealth. Our group, Wealth Aggregation and Insights, sits within that technology division of wealth. Our essence and mission and vision is to provide clients with improvements and efficiencies to grow their practice, to nurture their relationship with their end investor. For those that might have known of Investigo, Broadridge acquired it in 2008. We rebranded to Wealth Aggregation and Insights with a purpose to reinvent ourselves, to reinvigorate the purpose and power of the data to help with retention and to provide more of a holistic, harmonized, personalized view of the client's assets that are on platform and those that are held away. When you look at where we're trying to go from a company perspective and most importantly within wealth, the top 3 pillars within our transformation journey are around advisor productivity, digitizing operations, and personalizing the investor experience. And when we went to market to find a solution provider within this value-based space. YourStake encapsulates all of that and checks off all the boxes, especially in this politically and subjectively charged environment that we all live in. And we componentized it. It's a white labeled solution. We wanted to provide a seamless experience, and we'll show you that in about 30 seconds. Here on the page, just within view, on the left-hand side is what we do from an aggregation point of view. So not only do we pull in and import all of the positions and transaction activity, we reconcile them, we normalize them, and then we distribute and stream them with everything on the right-hand side of the page here. So whether it's a web application, a file delivery, a hosted database, Snowflake data share, open API architecture, all the data that we pull in on platform can be made accessible, so you can control your own experience, or you can leverage the visualizations that we have created. So with that, I'll show you our investor portal, and this was our initial implementation with YourStake. There's other initiatives in the works. So let me share my screen here. Perfect. Let me make sure we don't time out. So what you're looking at here is our client portal. So this is advisor permissioned for those that want to be able to share with their end client their portfolio value, their change in value over time. You can allow your end client to see a breakdown of your assets and investments within your portfolio and group. We enabled a module off to the right here, value aligned, value-based investing, giving the user the opportunity to select their own values and to personalize them. We actually will seed the system with YourStake preferences. They have kind of a collection of all of their users and then provide a kind of a default most popular selected values. So we'll lead in with that if the user hasn't provided their own selections of those values. And then we'll show the overall alignment score across their positions to kind of show if they're aligned or not. And then we have other detailed reports that I'll show you that show a little bit more information. So let me just click into the assessment. This is the questionnaire. What was attractive to us was the simplicity in it, not having to go through an arduous, complicated, time-consuming survey. These are all relevant topics. They're contextual. You can pick which ones are important to you in terms of having fewer weapons, racial equity. And then it's a simple toggle, very binary in terms of what's important or less important to you. And then that will then influence the alignment score and your overall exposure to your positions, and then your detailed scoring from within there. So once that's set, let me show you kind of the side-by-side comparison. So these here on the right are the actual preferences and values that were selected by the end client. And then you can kind of see a grading or your highlight percentage, if those are on track or on target or in the red here. So you'll see the range across each of the different granular value categories, and then the percentile ranking within there. What's really nice too, this report that we're pulling in, just wait for this to refresh one more time. We have I believe it's using AI. It's a comparison with the S&P 500, and it does a nice summary write-up of kind of a talk track for the advisor. Here it is, the value alignment report. So a nice, easy bar chart visual. You can see the overall alignment score to the index, and then a nice side-by-side breakout of your values in your portfolio in comparison to the S&P. This can be customized within YourStake. We didn't want to replicate or develop a duplicated effort with what YourStake has in their full platform. This is like an entry or a precursor into the full-blown value-based investment. So it gets the conversation started. It's nice for prospects. It's nice for existing clients to begin that journey with them. But it gives the advisor kind of the highlights, a nice AI generated. Here's the key highlights you might want to touch upon. Some of the things that we're working on as kind of a phase 2 that I alluded to, we have a digital marketing advisor stream business unit within Wealth. So we want to be able to tie in the marketing content that's relative to that client value. So if they have an affinity with animal rights, being able to send them relevant content based upon the behavior assessment that they've taken. So that's a natural extension that we're looking to do. And then similarly along those lines, alerting or insights into the values or behaviors, right? If one alignment score is significantly undervalued or overvalued, bringing that to the forefront for the advisor within their book of business dashboard within our application. So those are some of the other things on the horizon, but really excited, just getting started. And definitely looking forward to future and great things with YourStake. So thank you so much, Patrick.
Thanks, Paul. So we have some time now for some Q&A. Jack, would you like to facilitate?
Yeah, if anyone has any questions, please throw it in the meeting chat.
I'll ask one, Jack, while we're waiting, maybe for some participant questions to come in. Patrick, in your experience within this landscape, have you heard any objections or any counter arguments around I think in some of your metrics or your research you mentioned possibly compliance or account opening. How have advisors or the home office ingrained this within their workflow in terms of KYC or investment objective? Maybe you can speak to that transition of how they started to now roll out the value-based investing kind of mindset.
Absolutely. So I'll address what our clients started doing here in the United States, and I'll also give context that in all of Europe, actually, in EU countries, it is a mandatory requirement now to have the client take a questionnaire or explicitly opt out to taking a questionnaire at the beginning of the investment process, and to have that selection of their preferred values approach put into the IPS and record kept, and the firms must maintain some ability to report over time on how the investments are fulfilling that original objective. In the United States, our clients have been, one of our very large bank clients used our questionnaire and tied it to all of the, especially the SMA portfolios they offered, as a way of making sure that they can match what people are interested in with what they're doing. And they used our alerting feature, which Paul mentioned could be up next on the Broadridge roadmap, to be able, as a compliance office, to manage over time the complexity of tracking that these investments are in line, they haven't drifted away from the values that the client selected originally, and sort of be able to sleep at night. The thing that we have found really effective in the United States is in the proposal workflow. So the firms that get positive client engagement and help win business based off of taking interactive risk questionnaires with prospects as part of that process, the values can really shine as a differentiator for an advisor and another touch point to grow that bond in that critical sort of evaluation phase. And that is leading to increased ability to grow business for the advisors that are comfortable doing that.
And that actually flows into a great question we just got from Ken, and then we'll answer Frank's question after. Just the segue was perfect, so we can't say no. What is the feedback to opening the client conversation in regards to their values rather than performance, investment account type, style, investment vehicle? I'm assuming it'll lead to a deeper understanding of the client, family life, etc.
Yeah, great question. A lot of our advisor clients use our questionnaire during a meeting with the client and use it as a conversation guide and not just a survey they take on their own time and deliver the results. So they'll use the opportunity presented by having these different values and details up on the page to now, the client's like, oh, I'm interested in toxic air because I've grown up near a factory and all my sisters have asthma, and it really leads to the types of conversations that go into the personal life stories and philosophies and details that are really how people bond. So it's a great aid to doing that, which is critically important for advisors. And the Schwab Sustainable Investing group has put out research that when people are invested in portfolios that they feel reflect their values, they, one, increase the wallet share of their net worth that they allocate to investments, which is great for investment managers and great for just people building wealth, saving more, having more market exposure. And two, when there are tumultuous times in the market, if someone has a deeper connection with their portfolio, they're going to be less likely to sell off in a panic, more likely to stick with the portfolio over time because they have more of a connection, more of a emotional touch point, or conceptual alignment with their investments. So that's helpful for just making sure that clients are performing well over time and not selling low, buying high. But also it's I think a testament to how an advisor can adjust their ongoing relationships and conversations with their clients so they have other topics to present and bond with over clients beyond just every quarter talking about the markets or how the markets are down, how the markets are up. Now there's a whole the ability to have a robust way of talking about values and substantiate with data and reporting can really drive a different qualitative experience of how a client thinks of their advisor and their portfolios.
I think that's great. Another question here, and might make more sense. Paul might have better answers than us. Can we bring back this information into our CRM? And I guess it's specific to the Broadridge integration there.
So the value scores and selections are actually still saved within YourStake. So we're calling the YourStake API to render those. Any type of pass through to any other third party, we would have to work with YourStake on to deliver or send that data. We're not persisting or storing that data within our platform. Everything is being pulled up in real time. So probably more of a question to Patrick if there's integrations with like a Redtail, a Salesforce, etc. We have them on our side just for this initial integration. We didn't store or save any of the value scores that are presented on the UI.
Great question. So we do have clients that use Salesforce where we have integration points, and we have integrations with, for example, the Orion general platform, which is now the owner of Redtail, and we have integrations with other similar aggregation systems like Adapar and the Cricity data feeds. Over the next 6 months, 2 quarters, we are planning to build out more deeper integrations with Wealthbox, Redtail specifically. So those are upcoming.
Right, and that's all we have for questions so far. So if anyone has anything else, please throw it in. But thank you both for joining us today. Any parting thoughts or things you want to add as we wrap up?
No, I think from my side, it's just more about getting it out into the marketplace, getting more visibility on the importance of it. I love the research that Patrick has shared. I think it's empirical evidence that it does matter, and people and investors want this. I think it's converting a lot of the legacy mindset and misinformation on, I love the breakdown of the historical evolution of this kind of theme of how it's gone from ESG to now value-based investing. So the future is ripe, and solutions like the one we have with Broadridge and YourStake are very now, and let's get on board. Let's go. Let's get some more feedback, and let's iterate and build some more.
Yeah, the delta between the high level of surveyed client interest and the funds that are not yet allocated is really pure opportunity.
Of course. And we have another question just came in from Justin, and it's a little heady, so give me a second to read it to you. Considering the limitations that firms typically run into, i.e. limited ability to a granular and the alignment around a true representation of exposures versus non-exposures, the expansiveness of data seems to be a differentiator with this partnership. Exciting. If understanding this appropriately, the alignment score results express the intended allocation accurately. Can you speak to or brag about the effectiveness and capabilities of the way that the data is being leveraged to achieve a true representation of the expressed values of the client from the questionnaire?
Sure. So, Patrick, this is probably going to be a multi-pronged answer here, right? So the ETFs, for instance, that we'll have within our aggregated platform, say like a Vanguard real estate fund, we're passing that QSIP or ticker to you, and then you have on your side 200 plus sources of aggregated value-based investment data that you're then pruning through in order to derive that alignment score. Like maybe you can just speak to the factors or the criteria that go into the rating. If I know you guys don't like using score or rating, but that go into the valuation or the scoring of that.
Sure. So our core team, the majority of our team and the core competency we have is in data science and AI to be able to aggregate unstructured and semi-structured data from around the world, globally, to be able to identify across any issue that a client could care about. So a breadth of metrics. I think we're around 300 metrics, and we add more all the time. And then distill those into the intuitive, groupings of values and the reporting. So the questionnaire that Paul showed, the screen after you selected the category posited questions like, I'd like to align my values with this issue or that issue. And all of those represent one or sometimes a couple of related metrics that are then translated into the alignment score. And like Paul said, the implementation on the Broadridge platform is designed today as the introductory conversation starter. So we're showing the alignment overall and how that breaks down among the holdings. And on the YourStake platform, and potentially as we evolve, growing more and more of this into the Broadridge platform, we have a suite of additional reports that really show the granularity of data with different types of designs and styles for different use cases, whether it's a quick conversation or an in-depth presentation to an investment committee of a foundation or a family office. The I think second part of this question is, can you brag about the effectiveness and capabilities? The data and the ability to be granular is really the differentiator between a experience of someone going to an advisor and the advisor just saying, oh yes, this is a investment for you, aligned with your values, sustainable, trust me, versus a client being able to say, here's what I care about, and then the advisor being able to demonstrate exactly why they are investing to have impact and alignment according to those values. And for the clients that are passionate about particular things, and you can think of any number of issues that are hot topics in the world right now, from international conflicts to social issues to environmental issues. For someone who is deeply passionate about an issue, even if they haven't previously considered using their investment finances as a way to represent their stance and beliefs on that issue, it's a really empowering and exciting experience for people to be a part of aligning their life with change or alignment to their core beliefs that motivate them throughout the rest of their life.